Hi everybody, this is Gary Dean of Sentiment Timing, and this is our technical video report for Monday, July 7th, 2025. So we finally saw a little bit of a red day today. It was down, actually, the S&P closed down 50, 50, but at the, at the lows, it was down almost 79 points. So we had this late day little rally here. We're at some resistance. So basically, the way that I would look at this for tomorrow is that if you see the S&P trade above this 62.44, I would anticipate it's going to come up and close the gap at 62.78. If the bears can push it through the 62.01, this is going to be your next support line. It's going to be right at the 61.86 and then down at the 61.78. So that's your short-term stuff. We had some bullish divergences at these lows, so that made sense. But really, the big panic part was when that had to do with the tariffs with, I think, Japan and South Korea. I forget whoever it was. But that's really was the knee-jerk move down, and then, buyers did step in. So, again, this is, important support, resistance right here. If the bears are going to continue lower, that's going to be that 62.33. 62.33. And if they do, you can see we have the support at the 61.82. So we may play a little bit of ping pong here. Just to give some of the indicators a chance to release some of the overly bullish sentiment that's been out there. So that wouldn't surprise me. Again, this is going to be this is the bull bear line that I'm looking at, the 61. Say 60, right around. We can even go here. Say this, the 61.80. If they lose that, that's where we're really looking at the next support that would be coming in, and that would be right around this 61.38. So those would be your downside targets if we have it. Now, if we start taking these things out, that's when we start looking at gaps to get filled. But this one right here is a gap that we have to keep an eye on. We didn't have any, well, I guess we did a little bit here. This is a 15-minute chart. So, yeah, you can see we had a little bit of a bullish divergence setting up there. And so the bounce did make some sense. On the hourly chart, we still have these bearish divergences set up. Again, this is the more important, or say the longer-term bull bear line, and that's at 61.50. So obviously, we have the first one that's at the that's at the 61.80. Hang on one second. Okay, so again, so you can see we stopped right near, I just had to put the moving averages on. We stopped right near the 50-day moving average. If that gets lost, then what we do is we watch the 15 minutes, so that would be the next support to 61.80. And then really the more important is going to be the 61.50. If the bears can get through that, that's where we start looking at a push down somewhere into the 60.37. But again, we start doing this because of the sell signals that we have in place. I wouldn't be surprised to see us trading a little bit lower than that. Just really give the market some time to digest the gains that we've seen, and then really go from there. But we have these. So the important support is 61.90, and then we're coming down to this to the 61.50. Below that, that's where we start looking down at these levels. Above it, again, really what we'd be looking at is a move going up to the 6,300. So there's not really a whole lot. I think tomorrow we'll get some pretty good information from Mr. Market, because if this piece gets taken out here at the 61.80, then I believe we have a good chance of starting to filling some of these gaps that we have left open. So let's just see what plays out tomorrow. Have a great night, and I'll talk to you guys in the morning.